So if you take the lump sum payout and you receive the full amount of your business all at once, this could raise your income enough where you are susceptible to all of these additional taxes that you've never had to face. In order to minimize taxes on the sale of your business, you want to think about what your current tax bracket and tax situation looks like, as well as in the future. Depending on how that looks, you may want to structure the sale as an installment sale where it takes place over time. It's more of a gradual transition of the purchase and the business. So this would mean that you would receive the proceeds over time gradually, as opposed to a lump sum payout where you're receiving the full amount all at once. When you sell your business, you are most likely going to be encountering capital gains taxes, which is a tax on the amount that the value of your business has grown. So you're going to need to know what the cost basis is, so what the initial value of your business when you purchased it, plus any major improvements you've made, and then what are we selling it for? What is my tax bracket? So what is the tax rate that I'm going to be paying on these capital gains taxes? The federal rate is, the maximum capital gains rate is 20%, and here in Massachusetts, the capital gains tax rate is 5%. So you may be looking at 25% of that sales price being taken away in simply capital gains taxes. And also, depending on which state you are in, that capital gains rate for the state tax is going to differ. In states like California, it's upwards of 14%, whereas other states it could be 0. So that's going to have a large impact on the net amount that you actually receive in your pocket at the end of the day. It's just important to take a step back and think about, what does my situation look like? What taxes might I be faced with? There's also additional what we call trigger taxes that could come into play, such as increases to your Medicare premiums in the future or net investment income tax. Some of these come up when your income reaches a certain level. I'm always going to come back to having a financial plan in place prior to that transition. That allows you to take into account all of the other pieces of your financial puzzle. Ideally, your business does not make up your entire net worth. It likely makes up a large portion of it, however. So we want to take into account, again, what you're going to receive from the business, and that means after taxes, after fees and expenses, as well as any other retirement accounts or retirement savings for you and your spouse, if you have one, as well as things like Social Security, pension income, and any other potential sources of income, whether that is continuing part-time or having a consulting gig, either through your business or somewhere else. So putting all of that together into one financial plan will show you how you can turn that lump sum into your retirement paycheck. The amount of that retirement paycheck is going to depend on, again, all of those elements in the financial plan and your particular situation. We like to call that your retirement paycheck replacement plan.